What's going on, everyone? I just uncovered something absolutely mind-blowing that's been happening right under Wall Street's nose, and I guarantee most crypto investors have completely missed this massive opportunity. I'm talking about Stellar. And before you click away thinking this is just another altcoin pitch, hear me out. This isn't about price predictions or technical analysis. This is about discovering a quiet revolution that's been methodically capturing massive real-world financial flows while everyone else chases meme coins and DeFi yields. Let me start with numbers that'll blow your mind. Right now, as you're watching this video, there are 1.4 billion adults worldwide. That's 31% of the global adult population who are completely locked out of the financial system. We're talking about people who can't open a bank account, can't get a loan, can't send money to family without paying absolutely crushing fees. But here's where it gets really interesting. Over half of these unbanked adults live in just 7 economies: China, India, Pakistan, Nigeria, Mexico, Indonesia, and Bangladesh. In sub-Saharan Africa alone, more than 100 million unbanked adults lack any form of official identification. Yet, here's the kicker that changes everything. 4.3 billion people globally now use smartphones, representing 53% of the population, and an additional 3.1 billion live in areas with mobile coverage but haven't tapped into it yet. The infrastructure is there, the demand is massive, but the financial rails are completely broken. And that's where Stellar comes in, with a solution so elegant, it's almost scary. The hidden $786 billion market nobody's talking about. Let me hit you with some numbers that will make your head spin. Global remittance flows reached $786 billion in 2024. That's nearly $750 billion moving across borders annually, with the average fee for sending just $200 sitting at a crushing 6.35%, more than double the UN's Sustainable Development Goal target of 3%. But it gets worse. Corridors to sub-Saharan Africa still carry fees exceeding 8%, with some routes charging desperate migrant workers up to 12% just to send money home to their families. We're talking about over $50 billion annually, just evaporating into fees. Money that should be supporting families, education, healthcare, and small businesses in developing economies. Traditional channels like SWIFT impose multi-day settlement delays and percentage-based fees that make microtransactions completely uneconomical. This is where Stellar's approach becomes revolutionary, and the real-world data proves it's working. Stellar's explosive growth, the numbers don't lie. Here's where things get absolutely wild. In Q1 2025, Stellar processed $1.5 billion in remittance transactions, representing a staggering 45% increase from Q4 2024. The network now handles over 5 million daily transactions, with total accounts reaching 11.28 million, adding 3.2 million new accounts in just a single quarter. But wait, it gets better. Stellar's daily transaction count literally doubled from 1 million to over 3 million within a single month in mid-2025. That's not speculative trading volume, that's organic growth from real economic utility. The network now averages 7.9 million operations per day across 336,000 unique assets and supports over 9.69 million unique accounts. Protocol 23, scheduled for September 3, 2025, will scale throughput to 5,000 transactions per second through parallel smart contract execution. Compare that to Ethereum's pre-merge 15 TPS, and you start to understand why institutions are taking notice. The enterprise adoption that's flying under the radar. Let me show you some partnerships that'll make your jaw drop. Franklin Templeton just tokenized $580 million in US Treasury assets on Stellar, creating the first fully regulated tokenized fund in Luxembourg. Circle's USDC integration on Stellar now supports over $83 million in circulating supply, with more than $4.2 billion in total payment volume across nearly 500,000 accounts. But here's the real game changer. MoneyGram's partnership with Stellar created a global crypto-to-cash service spanning over 400,000 locations worldwide, serving approximately 2 billion informal economy workers who lack traditional banking access. Users can deposit cash in 30-plus countries and withdraw in 170-plus countries, making this the first implementation of its kind at global scale. IBM's worldwide network, built entirely on Stellar, has onboarded more than 6 international banks including RCBC in the Philippines, Banco Bradesco in Brazil, and Bank Busan in South Korea. All signed letters of intent to launch their own stablecoins, pending regulatory approval. This isn't some pilot program anymore. This is production-scale infrastructure. And you guys, I have a special trick for you, which nobody seems to be using, and I cannot wrap my head around why. Because if you sign up through my link down in the description onto the BYDFI exchange, you get a 10% deposit bonus. And now stay with me here. Now here comes the important part. If you have any trading capital on any other exchange and you move it to your newly created BYDFI account, you get on top of your capital you moved another 10% extra trading capital. As an example, if you move or deposit $10,000 to your account, you get $1,000 for free. And here is why this is possible. BYDFI makes money on trading fees. The more capital you have, the more you trade. The more you trade, the more they earn. So they're literally investing in your trading activity by giving you extra capital up front. And unlike other platforms, where bonuses are in the 1 to 3% range, BYDI bonus is a full 10%. I am not kidding. I really don't understand why nobody is doing this. To me, it really seems like people sometimes are too lazy or just don't like free money. I kindly ask you to pause this video and take your time to make it count. You can thank me later in the description of this video. Alright, let's jump back into the video. The technical revolution that changes everything. Now, let's talk about what makes Stellar's technology so revolutionary. The Stellar Consensus Protocol achieves transaction finality in 3 to 5 seconds, with fees measured in fractions of a cent, typically 0.1 XLM per operation, which equals roughly $0.3 at current prices. The network's anchor system is pure genius. Anchors are licensed entities that hold fiat reserves and issue corresponding digital tokens on Stellar's ledger. When someone in Malaysia sends Winggit through the XLPay anchor, it mints digital MYR tokens instantly. Those tokens travel across Stellar's network in seconds, get automatically converted through the built-in decentralized exchange if needed, and arrive at an anchor in Laos where they're redeemed into KIP. This 4-step process, deposit, mint, transfer, redeem, compresses both cost and time so dramatically it makes traditional correspondent banking look like sending messages by carrier pigeon. The network processed 471 million successful transactions in Q1 2025, more than Ethereum's 108.6 million, while maintaining zero finality delay compared to Ethereum's 16 minutes. The massive corridors, ready for disruption. Here's where the $500 billion opportunity becomes crystal clear. Let me break down the 3 biggest corridors that are absolutely ripe for disruption. First, remittances from the Gulf Cooperation Council to South Asia. GCC-wide remittance outflows totaled $131.5 billion in 2023, with the UAE alone contributing $21.6 billion to India. Traditional corridors charge 6 to 8% fees, but Stellar anchors can drop that below 2%, instantly saving families billions annually. Second, informal cross-border trade in West Africa represents $17.6 billion annually. That's between 30% and 72% of formal trade among neighboring countries. Nigerian leather merchants, Ghanaian cocoa traders, agricultural producers moving serious volume are stuck using hawala networks and cash couriers because traditional banking treats them like they don't exist. Third, Southeast Asia's underbanked population. Up to 50% of adults remain unbanked, while another 24% are underbanked, despite mobile penetration reaching 73% and projected to hit 80% by 2025. Digital financial services revenue was $11 billion in 2019, forecast to grow to $38 billion by 2025, with potential revenue of $60 billion at full inclusion. The DeFi explosion nobody saw coming. Here's where it gets even more exciting. Total value locked in Stellar DeFi protocols reached a record $152.1 million in August 2025, representing an 80% increase from July's $84 million. The Soroban smart contract platform launched in January 2025 and attracted over 200 new projects in its first quarter, with transaction costs below $0,001. Key contributors include Blend, a modular liquidity protocol for lending markets, Stellar DEX, and Aquarius Stellar, which gained over 240% TVL in 1 week. Despite being modest compared to Ethereum's billions in DeFi TVL, this represents massive momentum for a network that spent nearly a decade focused purely on payments. The regulatory tailwinds creating perfect conditions. The regulatory landscape is shifting in ways that make Stellar's success almost inevitable. India's Digital Payments Bill formalizes digital settlement frameworks. The Philippines' BSP Circular 122 allows licensed remittance providers to use distributed ledgers. Nigeria's CBN guidelines actively encourage fintech integration with blockchain rails. The passage of the Genius Act establishing US stablecoin regulations has boosted consumer confidence and attracted more companies to blockchain-based payment rails. Circle's reserve reports confirm 100% backing of USDC, with cash and US Treasuries, validated through independent audits. Stellar's environmental sustainability profile sets it apart from energy-intensive networks. The Stellar Consensus Protocol consumes just 0.173 watt-hours per transaction and emits only 0.562 grams of CO2 equivalent per transaction. In collaboration with PwC, the Stellar Development Foundation developed the first comprehensive blockchain sustainability framework. The network effects, creating an unstoppable moat. Here's why this becomes a winner-take-all scenario. Once Stellar anchors gain traction in a corridor, the network effects become almost impossible to break. As more anchors, wallets, and merchants adopt Stellar tokens and stablecoins, user switching costs to alternative rails become prohibitive due to established liquidity depth, speed advantages, and cost benefits. Multi-hop order books and pathfinding algorithms enable seamless interoperability between local mobile money systems and international banking, contrasting with legacy remittance corridors that lack such integration. Once corridors achieve critical mass, even smaller transaction flows default to established Stellar rails, just capturing 5% of the $786 billion remittance market translates to $39 billion in annual transaction volume. Taking 5% of West Africa's $17.6 billion informal trade adds $880 million. Penetrating 10% of Southeast Asia's $60 billion digital services potential yields $6 billion. Combined, we're looking at a pipeline exceeding $46 billion in annual volume. The institutional money that's already pouring in. XLM experienced a 319% surge in 2025, driven by PayPal and MoneyGram partnerships, demonstrating how institutional adoption translates to market value. Market capitalization reached $4.1 billion, ranking XLM as the 28th largest cryptocurrency globally, with 24-hour trading volumes exceeding $500 million. Major partnerships include IBM for cross-border payment pilots, PayPal's integration driving 76% surge in trading volume, and compliance with ISO 20022 standards, enhancing credibility for central bank partnerships. Circle's partnerships include BlackRock for tokenized asset portfolios, and pilot programs with Goldman Sachs and JP Morgan Chase for repo settlements using USDC. Franklin Templeton's tokenized money market fund uses Stellar for enhanced efficiency, transparency, and security in recording fund shares. The firm chose Stellar for its ability to process transactions in under 5 seconds, with costs below $0.1, enabling real-time verification compared to traditional funds, updating ownership only once daily. The convergence. Creating a perfect storm. We're witnessing a perfect storm of factors converging simultaneously. Rising mobile penetration in emerging markets, favorable regulatory trends, institutional DeFi adoption, real-world asset tokenization, and desperate need for cross-border settlement optimization. The real-world asset tokenization sector exploded from $15.2 billion in December 2024 to over $24 billion by June 2025, an 85% year-on-year increase. Archax, the UK-regulated digital asset exchange, completed tokenizing Aberdeen money market funds and integrated Stellar into their tokenization engine. As traditional financial institutions increasingly explore blockchain adoption, Stellar's established track record, regulatory alignment, and technical capabilities position it as critical infrastructure for the evolution toward programmable, efficient, and inclusive global payments. The investment thesis that changes everything. Here's the bottom line that most institutional money is missing. This isn't about speculating on token prices or chasing the next DeFi yield farm. This is about recognizing infrastructure that could underpin trillions in global value transfer over the next decade. The Stellar Development Foundation maintains a $100 million Soroban adoption fund supporting developer onboarding and ecosystem growth. This funding complements community grants, hackathons, and tooling improvements designed to cultivate a focused, finance-oriented developer base. Network effects create sustainable competitive advantages. Once anchor networks expand and smart contract capabilities mature, we're looking at network effects that become increasingly difficult for competitors to replicate. Protocol 23's performance enhancements, coupled with expanding DeFi capabilities and real-world asset tokenization, address technical requirements for handling institutional-scale transaction volumes. The future that's already here. The quantitative impact is staggering. Global remittance volumes total $786 billion annually. Conservatively estimating 10% capture represents $78 billion in annual transaction volume for Stellar. At fee rates of 0.01-0.05%, stakeholders collect sufficient fees to sustain operations while providing massive cost savings compared to legacy providers charging 6 to 12%. As DeFi applications and commercial use cases proliferate, revenue opportunities expand beyond remittances into lending, asset tokenization, and decentralized insurance products. Within the current decade, Stellar's comprehensive approach could contract the unbanked population by hundreds of millions, while unlocking over $1 trillion in on-chain economic activity. Your move in the financial revolution. The rails are laid, the anchors are live, the regulatory playbooks are written. Every piece of infrastructure exists today. Mature ledgers, tested corridors, live anchors, compliance frameworks, institutional partnerships. Scaling requires execution discipline across tailored product suites, precision partnerships, anchor network effects, and expanding DeFi capabilities. If you found this deep dive into crypto's most undervalued infrastructure play as mind-blowing as I did, smash that like button harder than Stellar's crushing legacy remittance fees. Subscribe for more institutional-grade analysis that connects the dots Wall Street doesn't want you to see, and drop a comment telling me which financial corridor you think Stellar should target next. Because this financial revolution is happening whether traditional institutions acknowledge it or not. And understanding it early could be the difference between watching from the sidelines and positioning yourself ahead of the institutional money that's about to flood into the backbone of tomorrow's global financial system. The $500 billion opportunity isn't coming, it's already here. Hiding in plain sight.